Good morning and thanks so much for tuning into the trade setup with me, Niraj Shah. It's a stable morning overnight across the world. Crude is flat, world markets are flat. Nothing too dramatic happening, which is probably not a bad sign. I mean, you could argue that 0.8% lower is not flat, but Nasdaq was flat. The Dow futures currently are flat as well. Nothing too dramatic out there. Asian market should come up on your screen. Again, a mixed bag of sorts. Nikkei is down about 1.39%, but Chinese markets are kind of doing okay. So our implied open, 14 points, and you know, it seems like a deja vu of sorts, right? Because it's pretty much what you saw on the Nifty yesterday, but underneath the hood, there's a lot of pain, and I think therein lies the problem. So let's get the trade set up for the day today. The broader market pain definitely continues with the lack of buying depth. I think, just before we get to this, the point being, viewers, and let's go to the previous point, the Nifty is deceptively flat, 24781, it's kind of holding true here. But look at the mid caps, look at the small caps, and within the Nifty as well, look at what Kotak Bank did yesterday, look at what some of the others did yesterday. So there is a flat market, but underneath there's a lot of pain, and seems that broader markets will probably continue to see that pain because there's lack of buying depth. HDFC Bank Q2, IT strength, all of that shows that large caps can handle pain a lot better. This is when, for the longest time, people have been talking about how large caps fill the port of safety and mid caps and small caps shouldn't be bought into. Look at the 1 month performance, or look at the 1 week performance, or 15-day performance of the mid caps, small caps versus the large caps, and that will tell you a story. From among sectors as well, I mean, cement, just a ho-hum set of numbers coming out, and the only point is because it was so well anticipated that there is not as much pain on such horrible numbers. I mean, Ultratech today, the brokerage notes are also saying the same thing, that they're waiting for the con call, but the numbers were even lower than the low estimates. That is the problem. Nevertheless, stocks to watch in the session today. Okay, the big listing will happen today. Suffice to say, it's such a large IPO, and subscribed the way it has been, may not be a stellar listing. In fact, the chatter was that there is probably a 25-30 rupee premium. Even that might get sold into. So be mindful of Hyundai if you're looking into buying it on the listing day because it's opening flattish or just marginally higher. The street isn't too gung-ho out there. City Union Bank, good numbers, NI up 8%. Let's move quickly with these graphics. Gross NPS 3.54 versus 3.88, so better performance there. Net profit up 1.42%, 285. Estimates were 272. And Macquarie, for example, says that the outperform rating with the target price of 185 because they believe that the growth engine is finally turning on for City Union Bank, and the risk reward looks favorable given the potential growth and ROA trajectory. So that's the first stock on my radar. Watch out for City Union Bank. Bajaj Housing, net NI up 12.99% and profitability up 21%, 546. You can find too many faults with this, significantly off the highs of the listing. 181 was the listing high, or around that time, 136 currently. Still an expensive stock, mind you. Mahindra Logistics left a bit to be desired, to be honest. Revenues up 11% at 1521 in line, but operating margins at 4.33. The estimates were 5%. Net loss of 11 crores. The estimates were 7.7 crore loss. Again, a quarter wherein Mahindra Logistics isn't quite able to consistently deliver. I think the street will question this performance. Balu Forge, very strong set of numbers. Revenues up 60%, margins expanded, 763 basis points at 29.5, and therefore the net profit up 100% at 48 crores versus 23 crores. For a auto anch to deliver those kind of margins is quite stellar. This stock will see a big thumbs up in the session today, I would reckon. Then 361, very good set of numbers again. Total income up 43%, net profit up 32%, almost in line with estimates. Again, good set of numbers, may get rewarded a little bit. Watch out for this one. Then EPAC Durable, good announcement, has entered into an agreement with Hisense to manufacture air cons and home appliances for India and for the world. Seems to be a big win. Let's see if the stock reacts. EPAC Durable. Watch out for this one. Cyient DLM, revenues were up 33%. Very strong this thing, YOY. But margins flattish, and therefore bottom line too very flattish actually. So therein lies the problem. Maybe the street doesn't reward it as much. Actually may punish it as well. Very quickly, let's move on before we wrap up. HFCL, for a stock with a lot of fanfare, revenues weak, margins expanded though, as a result of which the bottom line did okay. Maybe the street rewards the margin performance, but not quite sure. And then Bansali Engineering, weak numbers, revenues up 16%, but I think the margins performance was weak, as a result of which the bottom line performance was weak. So watch out for this one as well in the session today. And some key brokerage notes. BofA has downgraded Sapphire Foods to an underperform. Maybe this one reacts. Citi has said PB Fintech is likely to be the key beneficiary of any significant rise in new policy sales. And Morgan Stanley said banking will go through material challenges on profitability and Kotak will stand out as a positive. This is an opportunity to add. Watch out for this one. Thanks so much for tuning in, viewer.